Hello, traders. Let's take a look at the featured stock from yesterday and then let's find a new one. My goal is to set you up with some great trades, and I hope that you'll return the favor by subscribing to my channel and by posting your comments. You don't want to miss these trades, so make sure to turn on your notifications. Let's get started. Hello, traders. It's Wednesday evening, February 24th, and it's time for the weekly swing trading video. The market's keeping us plenty busy. We had to adjust some of our positions. We legged out of AMD and MU yesterday. Those of you who weren't able to get out on that leg yesterday, I hope that you're able to do so today. MU actually continued to rally. Really unfortunate the way they spread these bid-ask spreads out. Plus, you never know where these brokerage firms are routing their orders to. Should have been filled at a much better price than $3 on the 82.50 puts yesterday. I'm going to do my best, as you know from last night's video, to avoid such situations. But when the market goes haywire, you can expect crazy things to happen. But in any event, I'm going to try and give you some longer term trades, longer term perspective. That's what I highlighted yesterday. I do have a couple of shorter term trades that I want to try and get on as well, but the stock is going to have to cooperate. It's going to have to come in. So let's start with market analysis as we always do. We can see that the S&P 500 is continuing in this tight upward sloping channel. I believe that's going to continue to be true. We could get a nice pop this week from the stimulus bill. Who knows? Been waiting for it for a few weeks. Maybe they'll actually get it done. We have no idea what might be in it. So there is going to be a lot of money hitting the market. Some of it's going to find its way into stocks. So I believe that the bid to the market will remain strong. You can see how yesterday we had this test of the upward sloping trend line, and we found support just above that 50-day moving average, and we never looked back. Similar to this, the drops have been violent, very brief, and the snapback rallies have been just as violent. The problem is that options aren't really priced for this kind of volatility, because if you look at the IVs, they are very, very low. We'll take a look at the VXX in just a minute. So the point is that these long upward sloping channels can exist for a long time. When they are more gradual, like this one is, then they can last an even longer period of time. We'll go into the 15-minute chart, because then we can look at yesterday's price action. You can see how the market had been very weak, and now all of a sudden we break down. We have this big gap down, double bottom, higher low. That was a good sign. We never looked back. That was the price action yesterday. Today we tested the bid, and then we absolutely shot higher. We closed on the high of the day. Everybody's excited about the stimulus bill. We had congressional testimony from Jerome Powell. He has reiterated that the Fed will not tighten. They need to see improving employment conditions. So you add that to the stimulus bill, plus we've got economic news is actually pretty decent. That's what's had me so bullish all along. That's why we bought calls. I expected to see a breakout much before today. I've been expecting it any time during the course of the last 2 weeks. It did not happen. That was my error. When you're wrong on your forecast, you're going to ultimately pay the price. Now, we'll take a look at a couple of trades that we had on, because today we got out of Boeing. We put a high price limit out there. Those options, I believe, were trading at about $7 yesterday. When I came in this morning, I thought, you know, Pete, if you could sell those options, where would you be happy getting out of them? You know that Boeing's probably going to be pretty strong. You could see the relative strength in here. It had not sold off with the market very hard, and it bounced right back on Tuesday. Where would you like to get out of these? And I thought, well, you know, time decay is going to start becoming an issue on these, because we do have March options, and now we'll only be 3 weeks out from expiration. If I can get out for a small profit at $12, I'd be happy with that. That'll probably put us back up to this resistance level right in here. And I'll add a little bit just for safe measure so we can make a little bit of money on it. I did not expect to have a blow-off rally like this. The stock is all over the board. It's up, it's down, it moves back and forth. Every time that you think Boeing is going to get something going like here, which is about where we entered the trade, it falls back. Ah, not to worry. Here we go. Now, this is it. This is the one. Yep. This is the one that's going to go. Not so fast. Back down on that 50-day moving average. And then finally today, it goes. The good news is we did make money on the trade. We're out of Boeing. We sold those options for $12 today. Just a recap of where the account is currently. The model account is down 10% as of the close today. I am not happy about that. I'm going to do all I can to get it back on track, and I'm confident because I feel like in the first 2 months, we have had every little misstep and mishap and quirky things happening on expiration that you could imagine. We're going to start hitting stride. It's not that the systematic approach is flawed. Our timing is just a little bit off, and we have to change our approach based on option implied volatilities. So we did get out of Boeing today. Yesterday, I mentioned in the video, we did get out of the Apple trade. We sold those Apple calls for $1.80. We did not get filled on our Apple bullish put spread today. And I'm kind of glad that we didn't because Apple, quite honestly, pardon the pun, looks rotten. It did not do much of anything today. We could put up the major moving averages and you can see how it's been right on that 100-day moving average. On a day like today where the S&P futures are up more than 40 points, you would expect one of the largest market cap stocks to participate in a big way. All the index funds have to buy Apple. When you don't see the stock move higher and you have that type of market backdrop, it tells you somebody's getting out. At very least, there's some rotation out of Apple and into some of the cyclical stocks. But at most, maybe there's something going on that we don't know about. We'll keep an eye on Apple. Maybe there'll be a good entry point for us in the future. But for right now, we're going to wait and we're going to watch Apple. If I watch Apple for the next 2 days and I start seeing relative strength, you can betcha I'm going to be having a pre-open alert to selling out of the money bullish put spread, keying off of this 100-day moving average. But as of right here, right now, we're not going to touch Apple. So we can take a look at our staged order entry screen. You're going to see some new trades in here. We only have 2 open positions right now. We have the TSM March 19th, 125 calls. Again, we're 3+ weeks out from expiration. We paid $12.10 for those. I believe those options closed, yes, right around $10 today. I liked what I saw in TSM. I'm going to be watching the stock. I believe the stock is getting ready to release. I've watched other semiconductor stocks. AMAT had just a gangbuster day today. You know, Micron was trading higher. I still really like TSM. So I've got an offer out there of $15. It'll be good for the day. If we can get out of TSM at $15, that'll be a pretty nice return on our trade, and our account will be only down 5% at that time if we're able to hit that target. So we'll see how it goes. I'm going to watch the overnight market action. I'm going to take a look at the pre-open indication for TSM. If the stock is up $5, I'll probably raise that limit. But for right now, I'm pretty happy. If we can get out at $15, we're going to do that. We're going to focus a little bit more on longer term plays as I had explained. Penn is in great shape. No issues there. That stock is very volatile. You can see our spread is 74 cents bid, offered at $1.21. We're in at about $1.15 on that one. Really nice. I don't expect any problems with Penn, and I've got 4 new trades that we're going to try and get in tonight. So let's start reviewing some of those trades. And I want to show you before I start this, VXX, option implied volatilities are crushed. Absolutely crushed. Look at this sell-off. That tells me that institutions are not remotely worried about a market correction. And you could say, well, Pete, that is typically when these market corrections happen because option implied volatilities are low, nobody's buying put protection. That's when you get the big surprise events. And yes, I would generally agree with that. But if there's $1.9 trillion hitting the market right now, I don't see interest rates as impeding economic growth, and I don't believe that we're going to see huge inflation yet. I do believe that inflation could be an issue 6 months down the road. And I believe that because we've got higher energy prices because of shortages and cold weather, plus a lot of the wells have been capped because of the horrible demand that they've had for oil over the course of the last 6 to 8 months. That's going to be an issue. You also have an incredible amount of money printing. When you print lots of dollars, the value of the dollar goes down, and that makes imports much more expensive. That is inflationary. So I do believe that we are going to see some inflation somewhere down the line, but I don't think that it's going to creep in just yet. And I've actually got a couple of good plays just for that type of inflationary move. Right now, asset managers are not planning for a big market decline. They see improving economic conditions. There is no good news is bad news because right now the Fed's not going to tighten. If we get good economic numbers, good news is good news. Vaccinations are happening. We have the coronavirus new cases declining at a very rapid rate. That's excellent. Economies are starting to open up. These are all positive events that are happening. I don't see any credit issues currently. I always keep my eye on credit markets. So I think that the market is going to move higher, and that's why I think they absolutely annihilated option implied volatilities. And if we go back and take a look at what happened yesterday with the market selling off, that was the market selling off early. You could see how option implied volatility spiked up. They just hammered it right away, and they didn't stop. The VIX closed on the low of the day, and then today, another huge sell-off. So since I'm on the topic of interest rates, the one thing that you do want to keep an eye on is TLT. That's the U.S. 10-year Treasury bond. And talk about a sell-off. This is a huge decline. And we had a nice Actually, let me zoom out on this because then you can really see it better. We've got a nice orderly trading channel happening right in here. So let's draw that in, and we'll start right up at the top here, and we'll draw this line. It may not be perfect, but I think you'll be able to see the trading channel that's set in. And then we'll use the upper line. And usually when you've got these nice, tight, orderly trading channels like this, and you get a drop below the lower end of the trading channel within about 7 bars or so, you're going to see a snapback rally, and this would constitute a selling climax in bonds. What does that mean? That means that bond prices should start to move higher, and interest rates that have spiked incredibly, that have everybody so worried, should start to pull in. And I'm looking for that, so make sure that you're watching TLT. Any rally in TLT would be good for the stock market. And you can see here how it rallied strongly off the close, almost got back to the low from yesterday, which would have been good. So look for overnight upward movement in TLT. If we see that and we get a stimulus bill, I think you can be pretty confident that the market is going to challenge and take out the all-time high. So the backdrop right now is excellent. We just need to find stocks that we feel are going to perform well. So I'm going to show you my first one, and this has been coming up on the searches. I believe it was in heavy buying today, and there were so many stocks in heavy buying. I know it was in here. I just can't find it off the bat. It's also been on a lot of other searches, probably in Pop Bull as well. I'm going to look through here very quickly, and I don't see it there, but I know it's been coming up on a lot of searches. The stock is Mosaic. Really like this stock. Put up the daily chart. You can see how it's been running higher. And this is a technical play, but I happen to be very familiar with this space. Mosaic is a fertilizer supplier. Specifically, they mine potash, global potash supplies. About 60% of the world's potash is controlled by 4 or 5 companies. Very, very tightly controlled. Mosaic is one of those companies. And the reason that this is so important is because the global demand for potash is rising. The CEO came out last week. I think I mentioned this a week ago because they had announced earnings. He said that business conditions haven't been this good in over a decade. So there's been a huge drawdown in potash supplies. So that means that there is a lot that has to be delivered, and the prices are up, I believe, about 40%. But here's the backdrop that I see. You've got the Chinese economy rebounding very, very quickly. They're going to be consuming more grain. They're also eating more protein. It takes 8 pounds of grain to produce 1 pound of protein. So as their economy starts to rebound, the demand for agricultural products is going to be very high. You've had horrible rainy seasons in South America. That's also helping grain prices. So when grain prices start to go up, what do farmers do? They buy more fertilizer because they want to maximize their yield. They're making more money on the crops that they've been able to sell. So they're spending more money to make sure that they can maintain their yields and get those yield prices up. I really like Mosaic. I think this plays extremely well into inflation and higher prices across the board. This will be one of the first companies to benefit from something like that. And you can see that it's on a technical breakout. So what we're going to do on this is a little bit different than what we've done in the past. We're going to be putting on a diagonal spread. And a diagonal spread, I just want to talk to you intuitively about what we're doing here. We're buying a farther out in time call option that's in the money. And what we want to do to offset the cost of that call option is we want to sell a nearer term, farther out of the money call against that position to help us defray the cost. We also know that the shorter term option is going to be exposed to accelerated time premium decay. As a seller, that's a good thing. We like that. So this is similar to a vertical spread, except that the long side of it is much longer in duration than the short side. And so what we're going to do is, I'll show you the trade right here in the staged order entry screen. We are going to buy the Mosaic June 18 $30 call. It's in the money by about $2. You can see the Mosaic trade right here. So we're going to be buying the June 18 call, and we're going to be selling the March 19th expiration $34 call, and we're going to be doing that for a net debit of $4.20. And you can see that that spread closed $3.95 bid, offered at $4.38. So the difference in the strike prices that we have is $4. And the stock is going to have to rally $2 in the course of the next month in order for this spread. It won't really be in trouble if the stock grinds higher. If the stock goes up to our strike price of $34 in the course of the next 3 weeks, it's okay because those options will have some time decay, and our in the money options won't have much time premium decay at all. And we'll be able to unwind that position probably for a nice little profit. It won't be a big profit if the stock goes above $34. So we want the stock to just maintain a nice, easy, gradual move higher. And here you can see that's kind of what the stock does. It moves sideways, and then all of a sudden you get a little bit of a spurt, and then it kind of moves sideways, you get a little bit of a spurt. So if it does run up to $34, I'm expecting it to take a little bit of a breather over the course of the next 3 weeks to consolidate, to compress. That works to our advantage because we're going to be short those $34 calls. Let's take a look at the option chain here, and we're going to go open up the March 19th expiration, and we are going to, first we're going to put in Mosaic. So these diagonals are a nice way to be long an option with further out expiration and short some nearer term out of the money premium to offset the cost and to take advantage of accelerated time premium decay. We may have to do a few more of these types of spreads because option implied volatilities are so low. So in this particular case, these are the March 19th expiration. Those are the $34 calls. We're going to click on that bid because that's what we're going to be selling. And we're going to be going all the way out to the June expiration. And those are the options that we're going to be buying. We're buying the June 18th $30 calls. So we're going to click on the ask there. And you can see that those options are $3.95 bid, offered at $4.38. I think we're going to be able to get this spread done for our $4.20 debit. And if these options expire worthless, those being the March 34s, then we'll be able to rewrite another expiration cycle. Perhaps the stock at $34 will be able to write the April 37 calls. April 37 calls expire. Maybe we can sell some March calls. So the core position that we hope to maintain is the June $30 calls. I really like Mosaic longer term. If you're looking for an investment, I think this is an investment grade stock. You don't hear me talk investment very often, but I really like the backdrop for this company. So that's the spread. Let's go back through and review the spread. We are going to be buying the longer term $30 call on MOS. Those are the June 18th expiration. And we're going to be selling a nearer term, farther out of the money call against it. This is a diagonal call spread. We're going to be selling the March 19th $34 calls. We're going to be doing this for a $4.20 debit. So Pete, what happens if the stock goes to $36? Then we've got problems because we're going to be in the money on our $34 calls. And yes, our $30 calls will be performing fine. There should be at least a 20-cent time premium on the June calls at that time. If we had to unwind it and the stock went way through $34, we're going to be able to unwind that for a profit. And we may even do something called a roll where we buy in the March 34 calls, and at the same time, maybe we sell the April 35 calls or the April 36 calls. So we'll be able to continue to roll that position. As with all call options and long premium plays, our greatest risk is not on the upside in this trade. Our greatest risk is on the downside. And I feel that the backdrop is super, super solid for Mosaic. I love this technical breakout right here. I believe that that $30 breakout will be preserved. And I love the forward looking guidance by the CEO saying that these are the best conditions that they've seen in over a decade. CF is another potash producer that you might want to take a look at. Actually, they're not a potash producer, but they are a fertilizer producer. They specialize more in the nitrogen side of the business, but also another stock worth looking at that's also doing very, very well. So that's the first trade that we're going to be doing. Diagonal spread, a little bit different than what you're used to. So let's take a look at the next trade. And next on the list, we'll take a look at QS since that's listed at the top here. QuantumScape has been one of these really hot companies because they are involved in EV, electronic vehicles. They are a battery maker. They've got solid state technology. You can see what the stock has done since the IPO. I mean, it absolutely screamed higher up to the 132 level. Because it has this type of excitement and this type of price movement, you have very high option implied volatilities. I love the fact that the stock came down and it compressed for a very long time, right around this $48 level. And you can see how the 100-day moving average is coming into play right around $42. I want to go below this support level. Again, this company doesn't make any money right now. they're probably not going to make any money for a year or so. But the excitement over everything electric, and they have some type of solid state battery technology. I'm not an expert. I don't know. I look at the charts, I let them tell me what to do, and I'm looking for a play where I think we can camp out on something, make some decent money on it, take advantage of time decay, and distance ourselves from the action in this little choppy market. So what we want to do in this is go below this 100-day moving average. So here's our next trade. Very easy, just our run-of-the-mill bullish put spread. So we're going to be selling the QS $40 put. We're going to be buying the $35 put, and we're going to be doing that for a $1 credit. We've got $5 between the strike prices. So in that instance, I like to get a $1 credit. That generates a 25% return for us over the course of 2 months. So we've got to go a little bit further out in time on this one, but it's okay. It's better for us to distance ourselves from the action and to take some of these longer term plays than it is for us to get chopped up when we get these disruptive little market sell-offs. We'll still do some of those plays, but I also want to have some longer term positions on that we don't get shaken out of. And so we're going to click on the April expiration, and we're going to be selling the $40 put, and we're going to be buying the $35 put, and we're going to be doing this for a credit of $1. So quickly recap, QS, this is the April 16th normal expiration. We're going to be selling the $40 put, and we're going to be buying the $35 put for a $1 credit. And you can see we're 2 standard deviations out of the money. This could be a nice little core position for us. Time just continues to tick away. We'll be able to make a nice profit on that one. I like that stock and I like that trade. This compression that we have right in here tells me that this stock is going to find support if it gets back down there. In fact, recently, look at this heavy volume. You can start to see that the excitement is starting to bubble up on it again. So I believe this stock is going to grind higher. So that is trade number 2 that we're going to be doing. Let's take a look at the next staged order. Again, all of these are in the staged order entry screen, so you'll be able to see them there. Next, Boeing. Gee, I'm shocked. Boeing, we are going to be selling an out-of-the-money bullish put spread, and we're still going to be trying to get it done in March. So let's take a look at Boeing. The key to Boeing, and the reason I knew Boeing was going to take off, is Monday we had really negative news over the weekend. We had the market was selling off. We had this airline incident in Denver where the engine blew up. That was a Boeing plane, 777. Those planes are grounded. Uh-oh, here we go again with Boeing. Everything's looking great on Friday. Now it looks like garbage Monday morning. When the stock was able to weather that storm and stay right around that 50-day moving average, I went, aha, market down, stock not tanking on bearish news. There are buyers there. So I felt pretty good. I felt like Boeing was going to release, and it did. But as I mentioned earlier, chop, 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 chop all over the doggone place. Draw a line right here. There's our line in the sand. Because it chops around, the option implied volatilities are pretty high. We are going to distance ourselves from the action. And yes, we're going to need a little bit of a pullback in the stock, but we're going to be selling way out of the money options on Boeing, and we're going to be selling the 207.50 puts. Click on the bid there. We're going to be buying the 205 puts. By the way, all of these orders, they are good through the close Friday. You can see that this spread, even with the stock so far out of the money, here we're talking about selling the 207.50s, we are over 20 points out of the money on these options, but they still carry a lot of premium. 11-cent bid offered at 60 cents. Well, there's $2.50 between the strike prices, so you know we're going to be trying to get a 50-cent credit for these. So let's recap the trade. Boeing, March 19th expiration, we're selling the 207.50 puts. We're buying the 205 puts. We're doing that for a 50-cent credit. After such a huge run today, now the stimulus bill is coming up and there is going to be airline money, so that will be good for Boeing. Passenger traffic is also going up. But after a massive rally like this of $17, $18 today, could it give back $2, $3, $4 tomorrow? Yeah, I think it could, and then it could shoot higher. All we need is a little bit of a pullback, and I think we've got a chance to fill on this one. If we don't get filled, it's okay. I'm not going to force it. So that is trade number 3. And let's take a look at the final trade. Final trade is PXD. There we're going to be selling an out of the money bullish put spread, selling the 134 puts, buying the 132 puts. And first we'll take a look at the trade, and then we'll take a look at the stock, and you'll see why I like this one. PXD is one of my favorite energy stocks. They own an incredible amount of land in the Permian Basin. The Permian Basin has more natural gas than Saudi Arabia has oil. So you can imagine what kind of find that is. And right now, with energy prices on the rise, they are a low-cost producer. So we're going to go down to the 134 strike, and you can see almost 2 standard deviations out on that one. And we're going to the 132 strike. I need to make sure that I'm in the March 19th expiration, and I am. So we're good there. So in this particular trade, we're going to be selling the PXD March 19th expiration, selling the 134 put, buying the 132 put, and we're going to be doing that for a 40-cent credit. And you can see that spread actually is a negative 25-cent bid offered at 95 cents. 40 cents is somewhere in the middle of that spread. Going to need a little bit of help from the stock, but with this market, we're up one day, down the next, chopping around. I think we've got a good chance of getting filled on this one. So let's take a look at the stock. I'm going to recap the trade very quickly. PXD, March 19th expiration, sell the 134s, buy the 132s, do that for a credit of 40 cents. And we'll take a look at the stock, PXD. Energy stocks have been going crazy. I love this breakout right here. And you can see that price right there is $136. I'm not going at 136. I want to come just inside right in here with support as well. 1, 2, almost 3 touches. That is also a support level. So that's why we're down to the 134 strike price. I believe this support, which is above that 134 strike, will hold. I also believe there's your earnings after the close, and there's your reaction today. Stock is going to continue to move higher. These guys have all the pipelines. For a long time, the issue with PXD was that they didn't have pipelines built from West Texas into Houston. So they had no way of getting the oil to market. You had a glut of oil sitting there waiting for these pipelines to be built. They were completed a year ago. So all these guys need to do is to get those wells uncapped, start pumping, and they've got that oil flowing very quickly. Again, extremely low cost producer. These guys are going to get it up and running ASAP. Energy in general, lots of great energy stocks are moving higher right now. So oil prices look very, very firm. Those are the 4 trades that I've got for you this week. Again, very fast market recap. I think the market stays in this trading channel. We're going to have some of these disruptive moves like we've had recently, but as long as that trading channel stays intact, that takes us to about SPY 385.80. You can just watch the 50-day moving average. That's very close right now. That's the key level that we have to make sure that the market does not trade below it and close consecutively below it, like 2 or 3 days. We don't want to see long red candles closing on their low and closing below that level with follow through. I don't see that happening anytime soon. Again, we don't have any credit issues, and everything else right now looks really decent. So I'm trying to reduce the number of trades that we're doing. Let me clarify that. I'm trying to reduce the correspondence that I have with you. I'm trying to get trades that we can put on and leave on for a longer period of time. It's a little bit more difficult environment to do that in because option implied volatilities are so dang cheap right now. So that's why we're having to go farther out in time so that we can distance ourselves from the action. But the nonsense that we've had the last few weeks with Netflix, it's in the money, it's out of the money, it's in the money, it's out of the money, Airbnb, legging out of spreads, that's no good. That's not what this was intended to be. This was intended to be something that working professionals can take advantage of, do some after hours analysis, get into some longer term plays, and not have to micromanage positions. So I'm going to try and get us on that path. Sorry for all the activity that we've had in the first 2 months this year. We've had more adjustments this year in only 2 months than we had all of last year. And last year, we had a gigantic market decline, the likes of which we haven't seen since the Great Depression. So I'll get us back on track. Don't fret. I still like all the plays that we've done. We've just had to navigate a couple of rough patches. Thank you. Have a good night.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.